What is up, everyone? My name is Faisal. I am the head equities analyst at the Alpha Trades. For those who don't know me, usually I make these videos with Amol, but I'm gonna try and do something a little different rather than just write out a lot of my thoughts throughout the day, and hopefully by doing maybe just a rundown of what happened through a video medium, I think it could not only could I um, uh, get out more information, but you know, obviously this is going to be more off key. I'm not like the most refined speaker or whatever, but um, hopefully it could be some way that I can really wrap up everything together and tie things in a more detailed manner versus trying to, you know, write just a half article or something like that. So um, just let me know in the comments if you guys have any suggestions on what to cover, um, as far as just new topics or something that interests you throughout the day, something that you want me to go over. I can go ahead and get to that in future videos. But anyways, let's go ahead and get right to it. So today was a very interesting day because we finally got the first big wave of selling across high growth. And so, a lot of the high growth leaders, like I mentioned, Fastly uh, was down in the aftermarket. And then today, I'm sorry, it was down in yesterday's aftermarket. And then today, it opened down terribly and just did awful. It closed down 7%, and is down even more in the aftermarket. So that should be very interesting. We also got stocks like Livongo and Teladoc, which had sold off um, on their reaction to their merger. They bounced back a little bit today, but it's just my opinion. I really would not be in these names at all. I think the bounce you got today was a selling bounce, one that should definitely be sold after both these stocks have run up quite a bit. And usually, when you see the reactions to um, news like this, where it really wasn't that terrible of a deal for who was it? I think it wasn't that bad of a deal for Teladoc. Um, it was more so kind of like a capping of Livongo. But anyways, um, the deal itself was not bad for Teladoc, but it reacted terribly in the same manner that Livongo did. And that's not because the sellers are right and the bulls are wrong. I think this is once again one of those moments where we'll look back within 2, 3, 4 weeks at this defining moment where the reaction to this type of news was so terrible. I think Teladoc sold off 20%, Livongo sold off 20%, and it was like this is one of those bubble bursting events that we look back on over the next 4 weeks when I believe high growth has already started to pull back. This was, I think, the second day. I'll notch it up. Maybe I think could be the first, but yesterday was the day that we got the first initial signs. Today was the confirmation day. But high growth is starting to show these little pockets of worry amongst their leaders, and we also got more negativity out of stocks like Roku, which posted a fine quarter. I didn't think it was going to get hit as much as it did, and it ended up selling off. And then you also have who else reported today? Uber. I was once again. I think people going into it like if you're a long term investor, I think the report looked pretty good because I think the growth path for their delivery side, they already had such a good brand on their auto transit side or auto taxi side. And they even have more runway because they're trying to develop their own automated technology in AI driving. So that is really, obviously it's facing the short term problems in regards to COVID, but everyone knew that side was going to be bad. So the fact that the stock is selling off because that is showing a ton of weakness is really just once again, it's one of those things where even though it's a good report and the market sells off, I think it's painting a lot more pain that's foreshadowed ahead for the high growth sector. And because these stocks are already so extended, not Uber, but other high growth stocks, but I think this could be once again one of those bubble popping moments where even now that when we're starting to get some good news, everything just turns out a little bit worse. Um, I will say their food delivery side is awesome, and that's where I see like just massive long-term potential that had been built through this virus. So before this virus happened, the delivery game was a lot more competitive, and I think as they've come out of this virus, they've really established kind of the same brand as they did in their ride-sharing service. And over time, I think as we get through um, this whole virus situation and we start using Uber again and all these different things, uh, their their delivery side is going to be built out and it's going to have brand name, and I think it's going to create long lasting value. Even though the margins are obviously a lot more uh, thin on the delivery side. In my opinion, if you can grow it and make them profitable, um, that is just another reason for me to buy the company. But anyways, Uber sold off on a decent report. What else was it? Oh, Datadog. Also, I think sold off on a good report too. It's down like 15 points, which I think is like 20% or something like that. It's down huge. Um, so like all these stocks. Oh, I'm sorry. Maybe it was AYX. Ultrix is an AI data mining company that reported well. I think their estimates had them losing money this quarter, and they actually ended up profitable. And they beat on both the top and bottom line, and everything looked good. Um, that stock is down 30, 40 points. Now, I haven't read the report, but just based on the headline numbers, it looked like they beat pretty well, and there's no reason that stock should be down, 40 points. So, how much is it down? Let me see. AYX. Shoot, is okay. So it's down 20%. Okay. Oh, it looks like revenue growth is slowing a little bit, but then again, that's expected in a tough quarter. But anyways, it looks like a lot of these stocks are starting to come back down to earth, as you can see. Um, oh, they are expected to decline the earnings this year in the 2020 number right there. Damn, this stock is still that high. Um, So yeah, these are all stocks to keep an eye on for tomorrow. Uber, AYX, Datadog. Their reactions are very telling, and I want to say that because a lot of the high software or high growth software stocks that I follow, like Coop, look, it's even down 2% in the aftermarket. Let's go ahead and check out OKTA. These are all high growth leaders, in my opinion. Okta down 3.5 points. So a lot of these high growth stocks are getting shaken up because of how the reaction to their peers are, and I think that's telling for high growth as a whole. Now let me see. I'm gonna. Okay, so maybe biotech will be fun, but biotech is also an industry in the high growth space, and it's really. I think it's more forgotten in this day and age when you have all these software stocks doing crazy things. But as they come down to earth, I'm in biotech heavily. Um, and I will continue to be in biotech heavily because I feel like even though there could be a pullback in tech, which is what I think we're seeing now, um, it'll be very important to see if other high growth assets start to change, whether or not this is a real shift in sentiment or this is an actual like popping of a valuation bubble and things just start to come down to earth. Because with biotech, there's still going to be a lot of innovation and need for these stocks. Like I think they could trade much higher than they are now, given that they need to innovate and they're getting a lot of funding and attention to those paths of growth and innovation. So biotech is an area that I think can continue to expand, even though it's had a great run from the bottom of March till now. I think you could have something of a meteoric rise, or not meteoric rise, but like um, just like just a super jump in terms of performance, just like what you've seen in the software sector. So pay attention to that. I'm in LABU, this one right here. I got in at around like 58 or something like that, and that's how I'm playing biotech. Another stock that I picked up. Now I don't really have um, the quantity of long positions that I usually do have when I'm kind of feeling um, long heavy in the market, which I'm still like, I can't deny what's going on. The market is looking good and it looked good to close out today. There's just some problems with tech and high growth that I'm seeing. But Everquote is a stock that I've been picking up, and as you can see from this little note right here, it's actually down 26% for the week. Now, I've been very high on the stock. I spoke about it on Sunday to watch the earnings, and I did not think that it was going to have this type of report. But I didn't think it was bad. I thought it was fairly good. The only problem was I think people soured on an acquisition of like an insurance company that they bought or something like that. And I really didn't know what to expect out of that, but I didn't buy it before the earnings. I bought it after the earnings when the stock was close to like 41 and a half. And I bought more today at 39 and a half. So I'm really expecting the stock. I think it's definitely oversold way too much. It's one of my favorite growth companies. It's a very big disruptor, and I think has a clear online advantage in the insurance space as COVID continues to restrict people, not only from uh, personal visits for their insurance agents or how they meet to them face to face. They now do everything in a more online interface, and not only that, but they're finding new insurance plans that either fit their budget needs or something like that through sites like Everquote. And so I think they have the most dominant uh, um, site in the entire space, in the entire online insurance space. They're growing it very rapidly, and I think they're working with a lot of key insurance agents. So they're also getting money from advertising. Their clients are the insurance agents who want to find potential customers, and they go through Everquote. It's a very interesting company and a complex company that I think uh, it has a lot of ways to make money. And as long as they continue to grow, and I think these companies that are strictly online based, um, they're going to see a clear branding advantage during this time because most avenues are not open. And if you have a totally online avenue, um, you should expect to see higher traffic, and that's what they've been saying on their call. Their business is rarely affected by COVID, and so uh, I continue to be very high on this stock, and I actually think someone will eventually buy them out, but um, I'm very high on the stock. I think the stock was doing very well before this earnings report. And so even though they made this questionable acquisition, their cash generation is still top notch. They got 95% gross margins. And, even if it's an overpaid acquisition, I've looked at the cash books, like they're fine. Like they can generate cash very, very easily. So I think this business will definitely recover from any sour mood that was put on by this acquisition after the report. So let's go ahead and get into another topic. What else is there? What? No. What? Which ticker should I do? Huh. So I want to take a look at the value sectors. Value has been doing just some shady things recently. So given the weakness that I've been seeing in high growth, I've been expecting to see some strength in the value sectors. But it seems like only the materials, silver, and gold are really just rocking hard in terms of where the money's going out of high growth, and it seems to be going into those materials. So for the most part, that's the only value sector that's working to a large extent. I think industrials are second. Healthcare is just like flat. I'll put it kind of tied with uh, industrials because they've really lagged recently compared to tech, with where beforehand they were really keeping up with tech. But there's still a good amount of value in the industries, whether it's the healthcare insurance. But that's the thing. There's a lot of political overhang. So I get why they are trading at a reasonable valuation, but once again, that they meet my value criteria. So I'm just going to go ahead and label them as value. So there's a stock that I'm in, a Boston Scientific. That's one of my favorite value names in the medical device space. And I think as the dollar continues to come down, stocks like these that are very internationally based, they're just going to see tremendous profitability increases as the dollar continues to stay low or even dread even lower. So that's the stock that I'm watching that I think is just at a tremendous value at this point. Should be closer to $50, $60 by next year. I just have a very strong feeling about that. But once again, value still is not doing hot. Like you see, the stock for the week is down 1.76%, and it's like value itself is not doing good. Let's go ahead and check out XLF. That's up for 1%. XLI is the industrials. That's up 3%. XLE 3%. So I've been telling y'all that energy is showing some life, and now you can see that it's up. This is the weekly number. It's up 3%. Ever since those terrible reports put out by Chevron and Exxon, they've just been showing some signs of stability. No breakout yet, but it was definitely better than last week. And then let's just check out XLB real quick. Oh, materials are up 2%. So it's just mainly gold and silver that I think are making the bulk of the gains for the commodities. Because I don't think Vail is an iron ore. That's my iron play. Yeah, that's down 1%. So I mean, yeah, it's not as broad of a rally as you would expect, but mainly SLV. Damn, I think it's up that much in the aftermarket. Jesus, I got to cover soon. But these stocks continue to go up, or I'm sorry, these commodities continue to go up. But at some point, I'm like, okay, y'all got to sell off soon. I really feel like there's going to be at some point, like it's not going to obviously come down to my level. And I'm in a silver short right now, and I was expecting it to come down to 19 after it kind of had that burst to $23. But now I've had to raise up my base target, and I think that even though it's going parabolic, I'm not going to make the same mistake in selling or covering into the fear like I made with Chewy. I think what goes up has to come down. The question is that I have to be, able to move my base to the upside versus to the downside, or I'm sorry, not to the downside, but just to keep it the same, because that's just how volatile this stock is moving. It has to demand that type of raise in short-term technicals. So, I mean, I'm looking to get out hopefully by 23, but maybe revised up to 23 and a half, 24 by the looks of it right now. So we'll see. It's a terrible trade to be in. Hate it, but it is what it is. And then let's go ahead and see what else is there. You see Shopify real quick. Shopify is still up 6.2%. Wow. Okay. Well, you can see, Shopify's had such an amazing year, 2020, up 538%. Look at that. Now they're expecting down 4% next year. So at some point, like I get all the compression growth, but my God, if this company, it better be super profitable come 2022. I can't see a competitor overtaking their market share or anything like that. I don't know who else would be able to compete with Shopify, but that's strange to see a stock, like, even though it's growing so much, you would expect to see the longevity in the earnings growth, but there just seems to be so much need and compression for now. Like, I would think the earnings would still go up. Like, I can't believe they're actually regressing, which is one reason why I've been a little bit short on software recently. Like, I have the Coop short. See, for 2021, their estimates are coming down too because of that compression. Let's go ahead and check out Okta's earnings. There was another one that was coming down. No, Okta's is double for 2020. Let's see. No, that's not it. Let me see Zscaler. Zscaler is coming down for 2020, but going up in 2021. So there are a couple of different trends with all these extended stocks. And it looks like for the most part, 2021 is not going to be the same growth year that 2020 was going to be. So once again, I'm still short on software, and I'll continue to be short on software until I see the breakout signs. Like for Coop, I want to see a breakout above. I want to see a breakout above. What is this? I want to see a breakout above 320. And then that's when I think I'll cover and throw it in the towel, and then just be like, okay, I think software is probably going to head up from here on out. Because, it hasn't broken down yet, but definitely has not shown any strength. It's actually just really chopped it all the way back up to its top. And I think pretty soon we're going to get a really ugly day from this stock. Could be tomorrow. But that's just my thoughts. And then lastly, so I really liked value. I just think that, like, I'm in these city calls right now. They're expiring tomorrow. Um, I really think that value is going to have this amazing week at some point. Like, I know no one likes them. No one likes energy. No one likes financials. But I think both of them are about to have these super strong weeks because of just how much the compression is. So you see this jump right here. That was the last rally that they had. This was after kind of compressing through these levels right here. And then you just bam. Same thing. We're kind of compressing down here, compress, compress, compress. We're getting tighter and tighter. And at some point, I think it's just going to spike up. And the reason why I think it's going to spike up is because you see these numbers like this. So in 2021, Citi, for example, is going to make $6.37 at a 4% dividend. And they also have, obviously they have a lot of risk, but with the Fed saying we will hold up as much as we can, it mitigates a lot of that risk, at least I think in the short term. So for stocks like Citi and JP Morgan to not be trading at, somewhere closer to less difference. And so they're going to make 872 in 2021. They made so in 2018, where was the stock trading? So this stock was kind of trading. So I usually like to go back a little bit in 2017 too, because that's what's expected for 2018. So they were trading close to, so they can trade, JP Morgan can trade above $100 for sure. And Citi could trade, Citi should be trading somewhere between maybe 58 and $64. So a lot of these companies still have this spike, this juice that's supposed to come into them. I think we're going to see it sometime soon. Hopefully it's in unison with when the high growth sector starts to decline. But I think we're going to see a big move coming soon. So I may be interested in some calls over the next 2 weeks or 3 weeks to try and play that volatility. But yeah, I think once again, these earnings, especially the 2021 earnings, reflect now they could be a little bit too optimistic, but maybe they're too pessimistic. I don't really know the situation of what's going to transpire over the next, 2 months or when we get a vaccine. If we get a vaccine early, what does that do? I don't really know how to gauge this entire crisis timeline because I feel like people are getting more comfortable with dealing with the virus on a day-to-day basis, that once the vaccine comes, people will just be relieved to get back to normal everyday lives. And I think normalcy will eke back in faster than you'd expect. So, with that in mind, yeah, I think the estimates for 2021 for a lot of these companies that have been hit bad, which is the banks, could be even low. Same thing with energy. I think they could be very low, especially if you start to see bankruptcies in that sector. In the end, that's going to help the oil price of energy in general, because the ones who survive, now there's less competition, there's less people putting out oil into the market or doing the refining or whatever. So the ones who win in this crisis, I think they will, like, their stock price is being suppressed right now, but once the marketplace clears up, the winners will just have an even bigger advantage than beforehand. So, these energies and financials are both two sectors that I don't think are loved enough, but they will give you like maybe 2 or 3 amazing weeks, like 20% in those 2 weeks or 3 weeks. So I'm just watching them. Those are the two sectors that I think I'm going to keep an eye on for tomorrow and for next week, especially because, like I said before, high growth should be pulling back. So therefore, we should see more money move into value. That's my thesis. It hasn't really been the best or the most reliable thesis, but it's not bad. You see it in the small caps. You've seen it in the industrials a bit. You definitely saw it in housing earlier, but that was accompanied by very good numbers, not so much the hope of very good numbers like we're hoping for energy and financials. But anyways, those are the two sectors that I think I may want to be buying calls on and buying some stock in. But That's pretty much all I have to say. I hope I didn't ramble on too much, and I hope you guys got some good information out of it. If you have any questions, just feel free to hit me up on Discord, and hopefully we can just talk about it, and I can try and help answer that question. Once again, none of what I said here is financial advice. This is all just my opinion. So take that for what you will. Please discuss with your financial advisor before making an investment decision. And with that, I will leave y'all to trade tomorrow. So peace and have a good one.